Hey all, welcome to ShareTreck. This is Raj here. Good morning. We start a new week and let me just reorganize our window panes so that we have only one chart at a time. So you can see that S&P 500 and NASDAQ both were inching upwards, but for S&P 500, we have a hard stop out here. This diagonal line of blue that we see here is the one that's going to matter a lot for us. And just like last time, we could potentially go above that and then we could come down again, because that's what we have done for many years. And I've shown this chart before to most of you. I'm just going to do that once more so that those who had not seen it before can see it again. So this is the channel I'm talking about. Each of the candle here is a 1 month candle. Now, in this context, if you look at, let me just shrink these things a little bit. So that you can have a little extra real estate for the chart itself. Okay, so here we are looking at somewhere from 1st of November 2007 onwards, we have been in this double line channel. And every time we have gone to the edge of it, we have been pushed back. So you can see 3 touch points. This was the most recent out here. And now we are again moving towards that. So I'm thinking that at the most, we might probably go to 6302 on S&P 500. And then we are likely to come back down again. So that's what I'm looking forward to. And let me go back into our normal one-day view. So here we are. So this is where you can see it very clearly. So if we went up, it depends on how long we take to go near the line. It's a dynamic line of resistance. So we could go all the way up to 6,166 and then some, maybe somewhere around 6,219 or something in that range, and then start coming back down again. We also have the bearish divergence that we have to account for, which again indicates that the risk of the index falling down is much higher than it going up. That's what we have here. And if you look at the overall market environment, the Iran-Israel conflict continues. Any optimism that we see right now, which is what is driving the market, I think it is short-lived because the conflict has not ended. So as long as there is a conflict going on, anything could happen. It's a high-risk environment. You could get a negative catalyst and things can go down. Also, oil price hike may exacerbate the inflation potential and delay rate cuts further. When seen on top of tariff mess, when you look at the way the tariffs are being handled right now, it looks very potent. Now, I've read reports of many business people complaining that there is tariff stacking, which creates things which are much worse than what people believe it to be. For example, US importers from China are paying a higher tariff than advertised. That is because new tariffs stack on top of the old ones, which don't go away, and tariff stacking makes it harder to forecast how much they will pay. For example, if you import a product from China that includes steel in it, then you have the fentanyl tariff, and on top of that, you have the steel tariff, and on top of all of that, you have the general tariff on China. So the total comes to be much higher than people would imagine. That's what many manufacturers and importers are saying. And add to that the political violence with the assassination of Minnesota politician and the No Kings protest across the country, which is probably one of the largest in the known history. It's reported around 2% of US population was out on the streets protesting. All of this call for caution from foreign investors, as it may weigh on the DXY and also on the bond yields. This would also hurt the housing sector in Canada and US, both of which have mortgage rates linked to the 10-year bond yields. The longer mortgage rates stay elevated, the greater the pressure on housing market, housing sector, and the economy. And we also have news that Taiwan has blacklisted China's Huawei and SMIC further aligning with the US trade policy. This increases the risk for Taiwan and hence NVDA, in my humble opinion. So those are the things I think we need to watch out for. We also have a potential impact on the tourism sector, not only inbound tourism, but also outbound tourism, because the administration is now talking about adding around 36 odd countries, additional countries to the travel ban. And it's a huge list of countries, but you have countries like St. Kitts and Nevis, St. Lucia, and of all the places, Bhutan. So these are all countries. Some of them are also tourist destinations. So they could probably retaliate. And you may have a situation where the travel sector might face problem, both inbound travel as well as outbound travel. So we need to watch out for those things as well. So that's what I think I see from today's action so far. Then we have NASDAQ. NASDAQ again is moving just below this diagonal line of resistance. I believe it's heading towards a target of around 25,951.50 as per the charts, if we do a cup and handle out there. But we also have a bearish divergence going on out here. So it's going to be very difficult to determine which direction we are going. And therefore, if I look at the last few days, the movement upward or downward is very measured and it's range bound. So everything is going along with a certain amount of caution. And dollar index, well, the dollar index is down again today. It's gone to 97.991. We still have support at 97.338. The sentiment is kind of going towards the bearish side. And the technical indicators are also weak for the dollar index. The 10-year yield is starting to inch up again, and that's not very good. We also look at 20-year and 30-year yields inching up again by 4 and 3 points respectively, approximately around 4 basis points. So that's what we are seeing out there, which is not very conducive for the stocks as such. Now, if you look at AI stocks, you can see that NVDA is up in pre-market trading, and overall the chart is looking pretty bullish, except for the bearish divergence that we are seeing out here. And then we have Meta, which is also up 0.90% in pre-market trading, but it continues to have the bearish divergence. Google up 0.60%, has got very good support out here. This diagonal line of support indicates that today we have a support at 174.10. Pre-market, we are up 0.60% and are at 176.93. Our resistance is likely to remain 180.12 for today. Amazon is up 0.66%. Support continues to be the 9-day exponential at 211.83. And resistance is going to be at 215.97. So that's what we have for our resistance. Then if we look at the next chart that we see here, which is Apple, it's up 0.64%. Again, it's been moving in a range-bound fashion. It's not been able to break out of this diagonal line of resistance, which has been coming with it for quite a while now. And we had a support at around 199.23, but that now becomes a resistance because pre-market we are at 197.70. Our bullish sentiment is also waning. Chart is looking weak. MACD and momentum both are looking weak. Microsoft is again eking up a little bit of positive, up 0.35%. And this diagonal line of resistance continues to be a resistance going forward. And for today, it's going to be a resistance at 478.11. And the support is the 9-day exponential at 470.73. Right now, we are at 476.62. So that's what we have out here. And let's see what's happening with Tesla. Tesla is up 1.84%, and it had a resistance at 329.86, which now becomes a support. Pre-market, we are up 1.85%. So we are at 331.26. The bullish sentiment is gone. As you can see, the bearish sentiment has returned, and MACD is bearish. Momentum is just at average. And once the market opens, I expect a lot of risk for the market because G7 is starting off in Canada. And of course, Trump is coming in, and G7 leaders are wondering if Trump is with them or with Russia. And especially the Russia-Ukraine crisis is also in the spotlight. Iran and Israel fighting is also on the spotlight. And Trump is likely to be out of step with G7. So it'll be interesting to see how the proceedings take place, because anything that comes out from there could have an impact on the market today. So I'm going to be staying away from the markets because downside risks are pretty high. Oracle, after gaining for 2 consecutive days very handsomely, is now showing a little bit of drop of 0.50%. Of course, there could be some profit taking because we are at the all-time high for Oracle. So a little bit of sideways movement is essential. We have shot past our previous RSI resistance of 83.41. We are way high, so a consolidation is in order. So I think today would be a day of consolidation for Oracle, moving sideways and a little bit down to cool off the RSI. AMD is up 2.39%, and pre-market it's up 2.44% at 118.99, and we have the 9-day exponential at 117.97 as the first support that we have, and our resistance is going to be today at 121.15. And then we have SMCI, which is up 1.40%. It's still range bound. It's moving within a range. The top edge of the range is 46.02. Bottom of the range is 39.19. So the top range will still act as a resistance for today. Right now, we are at 42.14 in pre-market action. So 42.80 is going to be our first resistance. And then if we go on to AVGO, Broadcom is up 1.29%. And the support continues to be 250.62. Right now, pre-market, we are at 251.92. And then if you look at Palantir, 2.33% gain in pre-market shows a very strong Palantir with a support at the 9-day exponential at 132.52 for today. The bullish sentiment is starting to return. MACD, momentum, both are looking pretty good. Palantir is on the way up. And SMH, which is the semiconductor ETF, is up 0.98%. We continue to have the diagonal line of resistance, which is going to be today at 265.50. And remember, we got the bearish divergence going on for the entire semiconductor sector. Tempus AI is up 1.75% in pre-market trading. We have got this diagonal line of resistance, which will again perform the role of resistance today at around 76.40. And the support is going to be at around 68.25. And that kind of brings me to an end of the AI segment. I'm just going to take a quick look at Rigetti, which is up 2.81%, but still below the diagonal line of support that we had before. So this now becomes a diagonal line of resistance. So we are still on an inferior bull channel. We're not dropped down yet. And we are moving in that direction. There was a little bit of a boost when Jensen Huang said that quantum computers are almost here. And that gave a little bit of a boost, and then we're back down again. SMR is up 4.53%, gaining significantly over a period of time. Again, bearish divergence is very strong out here. We have to watch out for some amount of cooling. AVAV is up 1.49%, but I've already sold out all my AVAV. So that's there's a little more gain to go, I think, according to my target. With a reverse head and shoulder, we could go all the way up to 244.55. I've got a low risk tolerance, and I'm thinking that the risks for the overall market is pretty high, and my appetite doesn't allow that. So I'm on the sidelines. But young people, could probably still look at some more risk taking and trade the momentum and move along with the momentum and take some risks. Of course, this is my personal opinion, not financial advice, but personally, I'm not in a position to take any kind of risks. Next, I'm going to look at genomics briefly because we've got a lot of genomic investors in our channel. So I'm going to check that out and see what we can find in genomics. Prime is up 0.68% pre-market. Intelia is up 2.41% pre-market. Caribou is down 4.50 in the pre-market session. Beam is up 1.52% in pre-market. Altimmune is up 2.60% in pre-market trading. I don't see any new news that could possibly help us except for a potential presentation coming up. So I would say that Altimmune, I think, is just showing a little bit of market sentiment associating with the overall positiveness of the market. Verve is up 1.30%. Editas is up 1.02%. Illumina is up 1.10%. Still unable to break through this area of supply and traveling on the bull channel. And the 9-day exponential at 85.63 is going to be a support for us today. CRISPR Therapeutics is up 1.06% in pre-market trades. We still have resistance at 42.82. Allogene is flat in pre-market trading. Grail is up 1.67% in pre-market trading, continuing to stay above this diagonal line of support. It's a V-shaped recovery for Grail. And then you have PACB, which is down 1.67%, unable to break through this resistance at 1.21. Right now we are at 1.81. ARCG is up 1.36% in pre-market trades. Vertex is down 0.29%. Ginkgo Bioworks is down 0.78%. Moving towards this support, which is going to be at 8.36. And our resistance, which is going to be at 9.38. So that's what I have as far as genomic stocks are concerned. And what else do we have here? Sorry about that. We have Eli Lilly, which I am still invested in. I've sold off half of my holding. The other half is still there. And we have a gain, handsome gain of 0.79% still. And this regression channel indicates that we are away from the median on the bullish side. So we have to return back. And we have a long way to go. But I sold off half because I don't want to take too much risk and I want to continue booking profits wherever I can and keep the cash ready to reinvest when the market falls. So I'm bearish overall, and I do not trust the rally that is happening right now. It's very extended, and that's the reason why I'm keeping cash on the sidelines. I think I have cash. More than 50% of my portfolio is in cash, and maybe around 25% is in shorts, and the others are in longs, which are still in the red and it may take a long time to recover. So that's where I am right now. And that's the reason why I am a bit bearish. So friends, if you have any ticker symbol that you want me to look at, please let me know in the comment section. Otherwise, I think I'm done for the day. I'll go have a breakfast and get ready to start the day. Okay, guys, bye for now. I'll catch up with you again with the next video.